Boom. So let's just look at this beauty right here. Now we went over this sale on, I believe, Thursday. I was kind of just trying to show y'all how when price is consolidating, or it's kind of moving sideways, especially around a level, like I have my support and resistance areas, and then I have my heart line. If you guys have been watching my lives, you understand how I call my zones now. I have my supports, my resistance, and then the heart line, which is basically the center lines, or the center between the zones. But as you can see, this short on gold, you're looking at from let's just say 1878 to 1807 total target. Right now, you're at 1824, which is around 400 pips for a total of 4 days trading. That's why I love swing trading. Again, and I'll reiterate that a million times. Consistency with swing trading will break the banks. I love it. All right, so here's gold. Now let's go over the other ones I went over, GBP, CHF, and then we'll try to spot some new setups. Another one, and I went over this entry, everything, why I was getting into this sell, what I was looking for, the final zones. You can see price was around 112, and current price went to 1.10, and now we're kind of just nice little pullback around 1.11. I'm not sure. Let me switch over to Forex Factory. I don't know if you guys can see the screen yet. Do have a pretty good bit of news. We got some news today as well. CPI for CHF, which will be crucial for that trade. Jolt's job openings on the U.S. at 10 a.m., which is right now. And then for Wednesday, got a few bits of, looks like non-farm employment change for the ADP for USD. So definitely some news for the US dollar if you want to check out forexfactory.com. And you can go through and you can select. I only have like the red and the orange folders, which is basically like immediate to high impact for the currencies. But anyways, let me jump back over here to GBP. So you can see that now. Let's go over the trades that we have went probably for the last 2 weeks. If I can find my mouse. My two babies besides gold, and this trade's been phenomenal. This is the trade that I held for almost a month. I closed out my position, but you could see price is just playing beautiful. So my original entry was 186.680. Final zone 179.883. GJ current price is at 181. That is well over 500 pips. And then I showed where I scaled in each and every entry. I think I had 6 total entries on all these positions right here. Crazy. GJ just moves flawlessly like waves. I love GJ. And then another favorite. Let's go here. UJ. Another just flawless. Went over these entries, I believe, 2 weeks ago. A lot of you guys are probably going to think like, oh, well, that's crazy. Nobody holds trades for 2 weeks. I do. That's what a swing trader does. So just in case you didn't know that, you have a swing trade which can last. Swing traders normally, on average, I would say 1 to 5 days on average. Some 2 to 3 weeks. Very experienced, 2 to 3 months. I've never held a trade for 2 to 3 months, but some do. I know a lot of traders that do. They scale in on 2 or 3 positions. They hold, they cash out like crazy, and then they don't trade for 3 or 4 months. So swing trading is for the long term. Now, I don't change my risk, whether I'm intraday, if I'm looking for trades during the day, intraday trading, or if I'm doing like just a swing for the full day. Like if I'm looking at 9:30 and I'm expecting to close that trade at around like 8:30, 9 o'clock at night, I still have a 40 pip stop. That is for me. I always use 40 pip stops just because it keeps my risk reward just at a crazy level to where I can lose almost 6 trades and 1 trade take out all my losses. That's the benefit of having a high risk to reward. And for me as a swing trader, like you can see, I'm risking this little bit. I'm risking this little tiny 40 pips to make 600 pips. It's no brainer. The one-to-ones are possible. Like if you're looking for a 40 pip stop for a 40 pip gain, that does work. And I know a lot of people love that. But then how many, like 2 losses, how many wins does it take to recover that? So you got to remember, if you can create your strategy and your plan to where you can lower your risk and broaden your reward, obviously, like everyone wants to have a minimal risk for a max reward. Once you start practicing getting in on these zones, and after I go over these trades, I'm going to go in how and why. I'll erase all the drawings, and I'll do that every single live. I'm going to go on my simple strategy. You'll see how I do it. I'm going to do it again. Every live, I will go over how I spot trades and how I spot swings. So again, UJ got in at 146. This trade was absolute zero drawdown, absolute just gorgeous, absolute beautiful trade. You can just see, not always do you see when you get in trade and it just take off. I love it. I love UJ. And you can see it 9 times out of 10, it's going to hit the target 151 to 800. A nice little, what is that, 600-700 pip trade. So I just went over close to 2,000 pip trades just over this week or last week from Thursday to now, and then UJ and GJ from 2 weeks ago. That's the swing, and you can see, like, if you have patience and you're in a position and you're wanting, like, well, Brandon, when can I scale in? You scale in when on the pullbacks. Like if we're in a buy on UJ and we're up 100 pips, and then it does a 40 pip pullback, and our long-term goal is for a higher pip reward. On that 40 pip pullback is where you could put a smaller position. But again, a smaller position, like if you're in with a 1 lot, you want to go with a 0.5 lot. That way you've lowered the risk in case that it does go back to entry. You don't wipe out all your profit. So 9 times out of 10, if you look for your little pullbacks, because price doesn't just go if you're on a buy and it just straight bullish. You have your little, you can see right here, each and every little pullback. Once you have your chart marked up on your zones, you can say, okay, you can tell yourself the story of, all right, I've got my confirmations, I've got this, Fibonacci says this is at 36.8 or whatever, and you can take for me, I just look for, okay, if my entry's here and current price is here and we have a nice little bearish momentum, any of this area is good for a entry, because we see that it's a nice little pullback, and that's like 30 pip pullback. So 9 times out of 10 on a nice bullish run or a bearish run, 30 to 40 pips is about the max you're going to see for a pullback. And then just think of a slingshot. Prices gets pulled back, boom, and then it continues forward. That's how I look at for where I can scale in on entries. Higher time frames, for me, it's a little bit easier to look at, especially like if you look right here on the 15-minute time frame, it's going to be just a little bit or a lot of noise. Price going up and down, sideways, whatever. Higher time frame, you can say, okay, I had this nice little push. We got this little consolidation area. Price wasn't really sure what it was going to do. Came back up, respected these zones, and then boom, shot off. Now, if your entry's here and it comes up here and then it pulls right back to your entry, that's all. That falls all into like your trading plan on like what you want to do. If you have a goal for the day, if you're trading for $200 for the day or $300 for the day, and you were at that goal, but you decided to be not necessarily greedy, but just hold your trade, it's okay. You still have your original position. If you're still in profit and you're just a little bit of profit and you don't want to deal with the risk or worry about anything, just close the position out. A lot of you guys, you overcomplicate trading so much because you're trying to just create this massive story instead of just trying to trade day to day. You take a trade, you win, you lose, on to the next day. Not take 50 trades a day like you're an algorithm or something. All right, so there's UJ. We went over gold. We went over GJ, GBP, CHF. I believe that is it. I can't remember if we looked at, let me see if EUR USD.
I looked that up yesterday.
Nope, I think I was just showing you how to mark it up. All right, so I'm going to go to gold, XAU, USD. I'm going to do what I always do. You see, again, on higher time frames, this was my original entry on this wick right here. You see what price did? Price came all the way back up, wicked that entry, and then boom. Same thing for a bullish. Like I said, think of a slingshot. 9 times out of 10, when you see price break a major zone, which I would say is the like 1875 to 1876 area. Something about that psychological area. Like if you look to the left all the way back to 2005 or whatever, something significant with that price area. So 9 times out of 10, when you see price breaking these areas, you're going to see a massive pullback. And then pending orders come in, and it just, the banks take over, and hopefully you can catch that position. All right, so I'm just going to do this, remove all drawings. All right, going to go over how I spot my entries, how I spot my levels, everything, A to Z. I'm going to do this every single live just to show y'all consistency, clean charts, clutter free. I love it. First thing I do, I go to a higher time frame, go to monthly. Then I go to my line charts, scale price back down, and this is on any pair, not just gold, anything. Okay, so first thing, I only focus on where current price action is. I don't care about price all the way down here at 1067, which is almost 8,000 pips or however far away from current price action. I don't care about that. Now, what I do care about is around the current price action, you try to just get the best areas, and I'm about to show you this now. So what I do is just peaks and valleys. Again, do not focus on precision. Just boom, I'm going to put a line here. This literally takes me 5 minutes. You guys have seen how quick I do this. I don't want a lot of clutter. I just want current price action. Try to identify my zones. We'll put one right about midway up there, and we can put another one. But from what I see just off the line chart, I see current price at from 2011 was it 1826. What is that? 1820 or 24, I'm sorry. And you see where current price action is now. You see where, remember, when price is breaking through major levels, it always comes back and retests before the momentum kicks in. Price hit this years ago and then shot right back down. And then as it progressed through 2019 to 2020, you see price on gold come through, broke that zone, played around in that zone, moved sideways, and now price with gold is back at that zone. So what I'm looking for is 9 times out of 10, gold is going to do one of two things, which is obvious. It's a 50-50 really. But gold is going to respect this area and blast through and hit all new highs, or we're going to come back down and we're going to test. We're going to price is going to match some of these zones where it hasn't touched in a long time. In order for that to happen with gold, you got to have something pretty monumental, something chaotic fundamentally. I don't see that happening, but who knows? You know, we're in that big bubble again right now. Economy could crash, housing market could crash. We're in the highest record high credit card debt and foreclosures and bankruptcies and all that stuff, with the U.S. dollar being at all-time high. So right now, it is very hard to fundamentally gauge the U.S. dollar and gold, just because everything's so heavily manipulated. But anyways, on the monthly, we have our lines. Keep it clutter free, and remember, you can change the colors on these. You can do however you want. I just like the soft gray and these colors here. Just as easy on the eyes. It's just not chaotic for me. So let's go to the weekly. I could put another one here, and that looks pretty good. We got a pretty good gauge on where price has been, where it's going, where it's been. Go to the daily, and again, as always, you can right-click these. You can change your zones. Like if you want to put this a yellow here and a yellow here, and say, okay, these are the monthly high and low. You know, put your text. You can do all that if you'd like to. I don't like to do that. Clean and clutter-free. Go to the 4-hour. Still see prices, and then remember, I didn't spend any time looking for top of the wicks, top of the bodies, in between. I just put peaks and valleys where I seen where on the line chart, and you're going to see just how beautiful price plays at these areas. All right, so all the way down to the 1 hour, everything looks great. All right, now I'm going to switch back over to my candlesticks, and I'm going to go to the higher time frame. I'm going to show you. Now you see how and where I identify my zones. You see exactly how price plays around these areas, and it's so simple. Now I know I talked a lot left and right, but realistically that takes you 5 minutes. I can mark up 20 pairs in maybe 15 minutes. You guys got to stop focusing on, and I don't like using this word because a lot of you guys love it, but like the divergence or the MA's touching or the Fibonacci levels and all that stuff. You're trying to create a picture that doesn't exist because the market doesn't care about moving averages. It doesn't care about Fibonacci levels. It doesn't care about your divergence on it. It doesn't care about none of that stuff. You'll see where you could have this beautiful story and price showing you everything. You've got your divergence. You've got the golden touch. You've got all this on gold saying it's fixing to take a buy, and it drop 1,000 pips on you. That's just how the market works. So do not focus so much on your story to try to convince you on why you're getting the trade. Just take the trade. Have proper risk management in place. Whether you win or lose, if you've got your risk appropriate, you can move to the next trade. That's the whole purpose of it. And you start honing in on your skill, and you start realizing less and less is more. The less you have, the more you see. All right, so again, 4 hour on the time frame on gold. We see where we have price. I'll just put this can be like our major zone here, and then we can do, let's see, so price touched this area, came back down, broke through, came back, retested, and broke through. So that's a very significant zone for me. And remember, this is what I was telling you back in 2011 where price was. So we have a very, not necessarily crucial moment for gold, but it's very interesting. So before I even look at the candlesticks, before I even look for entries, I'm already identifying what I would feel as a buy for gold, because we have this push, retest, come back, a nice little pullback, and then could be a break for new highs, or gold could respect this zone, blast through it. I mean, not respect it, blast through it, retest. That massive area of support just become resistance, and now we're going to ride the lows of gold, because as you can see on the higher time frame, gold is in a nice little, what you could call like a bearish trend. You know, it is in a downtrend. We got lower highs, higher lows. I know I said that backwards because I never use that terminology. But anyways, so we have our levels, and then I'm going to go over what I like to call the heart line. As always, the heart line is just the in-between zones. You have basically your support, your resistance, and then the heart line. The heart lines are, again, back and forth. I do not like to take entries at the heart line because you can, perfect example, if you're looking on the screen, you see where price comes up. It's in this nice little huge bullish momentum. We have these two massive bullish candlesticks, and then price just died back down right at the heart line, and then does that, and you could be in a heavy buy there, whatever. What I do like to take entries are on these zones. So if you would have, even if you would have took a buy here and you had your 40 pip stop, and even all these wicks down that are fake outs and stuff, you still, from 1895 to just let's just say the heart line, 1934. That's a beautiful trade. You're talking from Friday to Thursday. That's a nice swing and a nice little reward for a little 40 pip stop. So if you're an intraday trader, the heart line would be where you would like to take interest, because you're looking for a quick in and out, not necessarily quick, but like 2 to 3 hours, 4 to 6 hours, something like that. That's an intraday. It's in the middle of the day because everybody works, you don't have a lot of time. So the heart line would be your area of finding entries. Swing traders, I like the major zones, support and resistance areas. You can see, and again, I apologize for putting these marks everywhere, but this zone, I see, if you see price coming up now, 9 times out of 10, I probably would have took this buy here, and price didn't follow through, hit your stop, and then price come back down, but it respected this area. Once I seen price retest that zone, say if I took a buy here and I had a loss, and then price come back and retest that area, and I see these candles exhausting through that zone, I would have took that sell. And then you see, remember, you always have like the first initial push, and then you have the impulse move. So like we have our little push here, and then the impulse move. Boom. Nice little push, impulse, boom. So again, what could be happening at gold? I'm looking for buys. Why I would be getting in this trade? Let's go down to the smaller time frame. I already see we're on the higher time frame now. Candles are respecting this area. I apologize. Let me zoom in this, show you. So you have this little, what y'all like to call the graveyard doji. I don't care. It's just a candlestick. But what I see is price came down to this area, and now it's moving its sideways movement. It don't know what it's going to do yet. We got probably a lot of buyers coming in and sellers coming in. So what price could be doing, it might consolidate right here for 1 to 2 days. We might have a little bit of USD news that just gives us a nice little push. But remember, this is a very significant zone. This plays all the way back to 2011. So 9 times out of 10, what you're going to see here is you're going to see a little bit of momentum, and then a huge pullback, fake out, and then price is going to absolutely explode off this zone. That's 9 times out of 10. Sometimes you have where price plays around here, and then it just rockets. You have so much pending orders coming in, or banks moving volumes, and it just skyrockets off. But that's very rare. Most of the time, that's a fundamental. Something chaotic like that would have to be some type of fundamental news coming in. So let's go to the smaller time frame. Boom, right off the rip on the 1 hour time frame. You see this nice rejection here. I'm going to go ahead and say, if I was looking for buys, remember we're looking for new highs. This is the first zone. So that would be like if you're looking for an intraday trade and it's at this zone, 1829 to 1896. Count those pips. That's crazy, even for an intraday trade. But we like to have a high risk to, a high reward to low risk. Entry would be at 1828 to 1974. Count that for a little 40 pip stop. Now, I didn't even look. I'm not even going to just, I would have that 40 pips. So 1824. But now let me say this. Not to change your plan, not to change your trading plan. You never want to make adjustments, but you can fine tune things. Fine tuning trades around these type of areas. These are the type of swings where you look for that when you see, oh my God, imagine if you would have caught this, and this is where you could have, again, price just completely respect this zone and skyrocket to new highs, which was around like 2035, 2045. Astronomical to where price is right now. So yeah, that's it. And then going at smaller time frames, because a lot of you, and I appreciate you guys messaging me on Instagram, those that ordered those books. I hope it helps. I had a few of y'all messaging me saying that mind-blowing, the ones for the psychological levels. I'm telling you, those are game changers. So smaller time frame for y'all asking me, well, what do you look for? What do you look for? Is there any candlestick confirmation on any of this? I'm not trying to paint this huge picture for why I'm taking one trade. I don't care. Like if it's a loss, I'm only risking 40 pips. So again, I'll consistently explain this a million times. Stop trying to convince yourself and tell yourself 100 reasons why you want to get in the trade. Just get in the trade. Just get in the trade. Practice on the demo account. If you've got that fear, which is the worst emotion to have, trade with a demo account until you can consistently gain a little bit of confidence, and then start with your live account. Start with Surge Trader account. And Surge Trader offers demos. So get on there. If you're not ready, if you don't feel like you're comfortable or you're confident enough to pass a challenge, practice on demo. That's the whole reason it's there. Now, obviously, you're not going to have the same emotion as a demo account because it's not money that you had to spend or anything like that. But you can gain consistency practicing on that account. Guys, I don't want to go too far. I just realized I've been 25 minutes on here. But so anyways, real quick, and I'll end this. Don't focus so much on candlesticks. Focus on levels. You've seen why I picked this level, where I was looking at, what price could do, and then go to smaller time frame. Again, now off 1 hour, I automatically see Price broke through, come back sideways, retested, and then slingshot. That's what could potentially happen. Price could respect that and just dump. We had a loss. It's okay. So let's go all the way to the 5-minute time frame. This is where your anxiety is going to come in, because when you're on the smaller time frame, the candlesticks, you're like, oh, well, I have this and I got divergence and I got my MA's crossing. No, you're on the 5-minute time frame. Look what price is doing. We're on an uptrend, sideways, downtrend, uptrend, sideways, downtrend. So, no, too much. Absolutely too much. Don't look for so much. What I look for is the respect of the zone and then one push. And so on that higher time frame, that's where I see it. I see the respect of the zone and one push. Boom, entry, done. We're done. That could potentially be such a beautiful trade. And that's not even the highs. Let me go to the higher time frame. I'm going to do this, and we'll come back to this in a few days, possibly weeks, but let's just do that right there. I kind of changed the entry. That's okay. I don't care. At least retest this zone, and then what price could do. Price come up. Boom. I don't have the, there it is. Retested this zone. Price could move sideways on this area for a few weeks, months, days, whatever, and then boom, we reach for new highs. Or what price could do, again, doesn't have to do anything we want it to do. Price could continue down, retest this massive zone, play around, and then push for lows. And that's it, guys. I appreciate y'all's time. I hope y'all have a wonderful week. Remember to take it slow. You don't have to take 50 trades a day. Stop blowing your accounts, because a lot of y'all mess with me and y'all get stuck in this mindset. You're over trading. You realistically only need to be taking 2 to 3 trades a week. I know that's impossible for a lot of y'all, because y'all are getting into trading and you're exciting. That is where your demo account comes in. You don't want to be playing around, or if you're going to be doing that with your funded account or live account, use a mini lot. Use like a 0.01 or a 0.02, something where you can just play around. Could potentially make it $50, $30, but you're honing on your skills. You're sharpening everything, and it's just giving you that confidence that you're getting a little bit of consistency and all that. Don't trade every day. Hope y'all have a wonderful week. I love y'all. I will see y'all Thursday. I'm out.